Welcome back to Market Brief After Hours. It is great to have you with us as we unpack a fascinating Tuesday on Wall Street. After a pretty rough start to the week, the markets decided to change the narrative completely. We saw a solid rebound, a lot of green on the screen, and a distinct shift in how investors are thinking about artificial intelligence.
It really was a complete turnaround. Monday was defined by this existential dread that AI was going to disrupt enterprise software overnight. But Tuesday? Tuesday was about realizing that someone has to build the infrastructure for that AI. The fear subsided, and the buyers stepped back in.
It feels like the market has a bit of whiplash, but let's look at the scoreboard. It was a broad rally. Can you walk us through the headline numbers for the major indices?
Absolutely. The bulls were definitely in control. The S&P 500 managed to advance by nearly 53 points, or 0.77%, finishing the session right at 6890. That's a solid psychological win, getting back near those highs.
And the Dow Jones?
The Dow had a very strong showing as well. It climbed about 370 points, which is a 0.76% gain, settling at 49,175. We saw some heavy lifting there from the retail sector, which we can touch on in a bit.
But I imagine the real story was over on the Nasdaq, given the tech focus you mentioned.
You nailed it. The Nasdaq Composite outperformed the others, rising 235 points. That is a 1.04% jump, closing at 22,864. This was really where that shift in sentiment regarding AI played out most aggressively.
Let's dig into that sentiment shift. Monday, everyone was selling software stocks because they thought AI would make them obsolete. Tuesday, we're buying again. What triggered the change?
A lot of it hinges on a massive announcement from Advanced Micro Devices, AMD. They announced a multi-year partnership with Meta Platforms. We are talking about deploying up to 6 gigawatts of GPUs for AI data centers.
That is a staggering amount of computing power.
It is, and the market looked at that and said, wait a minute, the infrastructure build-out is nowhere near done. AMD shares rallied about 9% on that news alone. It reminded investors that while AI might change software eventually, the immediate trade is still hardware and infrastructure. That pulled the whole semiconductor sector up, and the software names just rode the relief wave.
It wasn't just the U.S. figuring things out, though. We had some interesting action across the Atlantic. There has been so much noise about tariffs lately. How did European markets handle the pressure?
Surprisingly well. The fear was that the U.S. administration was going to slap a 15% global tariff on everything. But when the policy actually dropped, it was a 10% tariff.
So bad news, but less bad than expected?
Exactly. Markets love less bad. The Pan-European Stock 600 edged up 0.3%. If we look at the specific country indices, the CAC 40 in Paris gained 0.23% to reach 8,517. The DAX in Frankfurt added a slight 0.09% to close at 25,014.
And London?
The FTSE 100 in London was essentially flat, holding at 10,685. But the interesting sector there was automotive. You would think car makers would be terrified of tariffs, but the sector rose nearly 2%. Again, it's that relief that the rate wasn't 15%. However, not everyone joined the party. The FTSE MIB in Milan actually slid about 0.13%.
Before we move on to the currency markets, I want to touch on Asia. It seemed like a mixed bag overnight.
It was a divergence story. You had the chip-heavy markets partying and the trade-sensitive markets worrying. Taiwan's weighted index surged 2.75% to a record high. South Korea's Kospi also hit a record, up over 2%. That is the semiconductor demand offsetting trade fears. But then you look at Hong Kong, the Hang Seng dropped 2%, and India's Sensex fell 1.3% because their local IT firms are still dealing with those AI disruption fears we shook off in the US.
It really highlights how different economies are exposed to the same technological trends.
Precisely.
We are going to take a very short break. When we come back, we need to talk about the Forex markets. There are some really interesting technical setups developing there, and we'll look at which individual stocks made the biggest moves of the day. Stay with us. Welcome back to Market Brief After Hours. We've covered the equities rally, but I want to shift gears to the currency markets. It looks like the volatility has cooled off a bit, but the technicals are painting a pretty clear picture. Let's start with the euro against the dollar.
The Euro-USD pair is in a bit of a consolidation mode. It edged lower just a fraction, closing at 1.1776. But for the technical traders out there, the structure is still very bullish.
How so?
Well, the pair is holding comfortably above all its key moving averages. You have the 50-day SMA at 1.1734, the 100-day at 1.1690, and the 200-day down at 1.1654. As long as the price stays above that 50-day line, this pause just looks like a breather after the rally we saw late last year. Buyers are stepping in every time it dips near 1.1760.
What about the British pound? Is sterling showing the same kind of strength?
Sterling is a bit more conflicted. GBP USD closed at 1.3498, basically flat. But look at where it is sitting. It is trapped between moving averages.
A battleground?
Exactly. It is defending support at the 100-day and 200-day SMAs, which are right around 1.3394 and 1.3446. But it is capped on the upside by the 50-day SMA at 1.3532. It's stabilizing, but it needs to break one of those levels to pick a direction.
And finally for Forex, the yen. We saw a sharp move there.
We did. USD JPY rallied 0.8% to 155.88. This was a strong bullish session. It reclaimed the 100-day SMA and is now pressing right up against the 50-day SMA at 155.93. If it breaks above that 155.93 level, we could see a run back toward 157 or 159. The bulls have definitely reasserted control there.
Moving from currencies to commodities, what is happening with oil? We saw prices ease off recently.
That's right. Geopolitics is driving the bus here. Oil prices fell about 1%, with Brent crude dropping to roughly $70.77 a barrel. The driver was Iran signaling they are willing to make a deal with the U.S. ahead of nuclear talks. That took some of the risk premium out of the market.
And gold? It hit some fresh highs recently, but couldn't hold them?
A classic pullback. Gold dropped 1.2% to close at $5,163. It tried to break above $5,250 but couldn't sustain it. However, the long-term trend is still incredibly firm. It is trading way above its 200-day SMA, which is down at $3,907. This just looks like profit-taking after a massive run. Same story for silver, which fell about 1.1% to $87.18.
I have to ask about Bitcoin before we get to the stock movers. It has been a tough year for crypto so far.
Tough is an understatement. Bitcoin is down roughly 26% year-to-date, trading around $64,143. The big issue now is mining profitability. Revenue for miners has dropped about 30% in the last 3 months. We are hearing reports that many miners are now operating at a loss, which puts a heavy cloud over the sector.
Let's finish up with the individual market movers. We already mentioned AMD surging 9%. Who else had a big day?
The biggest winner was probably Vir Biotechnology. They jumped nearly 28%. They released updated Phase 1 data for a prostate cancer treatment that looked very encouraging. That is a massive move for a biotech.
And on the earnings front?
Keysight Technologies was a standout. They surged 23% after beating earnings and revenue expectations. They posted adjusted earnings of $2.17 per share, blowing past the consensus.
But it wasn't good news for everyone. I saw Dillard's took a hit.
Yes, the department store Dillard's fell 7%. Weak holiday sales were the culprit. They missed revenue expectations, blaming winter storms for disrupting store traffic.
And Whirlpool?
That was a rough one. Whirlpool slumped over 13%. They announced a concurrent public offering of common stock and convertible preferred shares. Shareholders usually hate that because it dilutes their value, and the stock price reflected that immediately.
Lastly, Ziff Davis.
They dropped more than 10%. They reported earnings of $2.56 per share, which missed the $2.70 estimate. In this market, if you miss earnings, you get punished.
Before we wrap up, just a quick note on the macro data. We had some jobs numbers?
We did. ADP private payrolls showed an increase of 12,750 for early February. It's preliminary data, but it's the fourth week of improvement. It suggests the labor market might be finding some footing after a shaky start to the year.
So to summarize, the market shook off the AI fears, tech led the way, Europe survived the tariff news, but commodities and crypto are still looking for stability.
That is the perfect wrap-up. It's a relief rally, but with tariffs and policy changes looming, volatility isn't going away anytime soon.
We will be here to track it all. Thank you for listening. If you find this useful, please follow Market Brief After Hours on your favorite podcast platform. We'll catch you in the next session.